Hello, everyone. Welcome to the webinar. We'll just give it another 30 seconds as people are still coming in, and then we will kick off shortly. So we'll be with you in about a minute or so. Okay, hello, everyone. I'm Karim Harji. Welcome to our webinar today. We will get started. I think we'll have a few more people joining us in the next minute or so, but why don't we jump right in because we have a lot to cover. And today we're going to be talking about impact measurement, today's landscape, and tomorrow's horizons. I'll introduce our speakers shortly, but the focus of our webinar today is to look at the state of play of where we are on impact measurement. I'll situate that in a bit more detail and also preview where we might be going next. This is an area that is attracting a lot of attention. We'll talk about some of the ways in which that is shaping up, but also to give you a bit of a preview to some of the material that we cover in the Oxford Impact Measurement Program, which we're holding in early June. We're joined here by our guest faculty and speakers. And so we do these series of webinars not only to share some of the research and work that we're all working on, but also to give you a bit of a preview of the kinds of things that we cover during the course. And we have a pretty vibrant community of folks who are both our alumni who have interacted with us in previous webinars, who are keen to just understand where we're at, where we might go next, and also to provide some perspectives on how this shapes up in your context. And so we'll have a series of polls later on to be able to get a look at where you are seeing these trends and issues play out, whether you agree, are there things that are missing? And we'd want to get your take also on other areas that might be important as we think about the role and relevance of impact measurement in the future. So I'll provide some very brief introductory remarks, and then we'll get right into the content from the four of us. And we'll start by charting out some of the themes from today's landscape. So where are we in the current state before we get into where we might go next? I'd encourage you to use the Q&A function that allows us to look at your questions as well as your comments. As we're going along, it'd be great to hear from you. How do you see some of the trends play out? Do you think that they are playing out differently based in your organization or in your region or your sector? And also let us know what we might be able to add to this list that we're about to share with you. As a reminder, this webinar is being recorded and will be shared with you in about a week. And we welcome your feedback after the webinar as well around additional materials that could be helpful for you. So just in terms of framing the topic of impact measurement, and this isn't the webinar where we'll do a deep dive into this, but we've got lots of other webinars that are on our YouTube playlist. We frame impact measurement as this broad toolkit of principles, approaches, and processes that allow for informed judgments of what a project or investment has achieved. And we'll particularly focus on social change and social impact, but it also obviously relates to some of the environmental changes as well. We will situate our perspectives more clearly in the next slide. But just to say that one of the challenges and opportunities is while we've been doing impact measurement in various forms for a long time, there are a lot of different users and uses. There's a lot of plurality around the stakeholders and the perspectives, as well as a lot of ambiguity. And this is particularly prevalent when you have the intersection of impact measurement across the public, private, and social sectors, which is where we, most of us, find ourselves on our day-to-day work. Another framing point is just often impact measurement is conflated with just a version of just looking back, looking at what happened. And as you'll see in our remarks, we think about this in a broader sense. It's not about just looking back, but also looking forward and looking beyond to try and understand how we make better decisions in the future, really to get more impact rather than just more reporting And we'll re-emphasize that because we think that the nature and the value and relevance of impact measurement continues to evolve in this basis, particularly when you have these intersections around different sectors and regions in the way that traditionally we haven't had in the past. In order to deal with some of these questions that come up with impact measurement, through our program, we use this critical framework that was developed by Alex Nichols here, and we've elaborated on this by starting with the questions around why we measure, to thinking about what we measure and then how we measure. And you'll see that a program flow reflects that, and then we really grapple with the consequences and implications of measurement in order to be able to have ultimately more impact. And so we've talked about this framework in previous webinars, and if you're interested, please follow up with my colleague Tanil, who will be sending out some of the emails post-webinar as well. But just to say that this is a framework that might be helpful for you and a lens through which you might look at some of the trends and issues that we're presenting today, as well as how they show up in your context. So I'll briefly introduce who we have today on the call. As I said, I'm the program director of our impact measurement program. Alex Nichols and I, who's the academic director for the impact measurement program, co-founded this several years ago. Alex also is the academic director for our three other programs in impact investing, social finance, and impact finance innovations, and has been working at the intersection of impact measurement across the private, public, and social sectors for a long time across research, training, and field building. Julia Mensink is the head of impact for Acumen, well-known impact investor, and also a part of our guest faculty for the program, and previously has spoken at a couple of our sessions and webinars. Matt Ripley is the head of impact for the good economy, an advisory firm, and also has spoken at various of our programs and webinars. Both Julia and Matt bring practitioners' perspectives, but from slightly different angles. And Alex and I blend the research and teaching, as well as all of us bring a field building perspective. It's important because we're going to try and situate these remarks across those different perspectives as practitioners, as people who are providing advice to different kinds of organizations, but also as critical researchers and actively engaged in various field building activities. So you'll see some of those show up differently in how we present some of the material we're about to share with you. We're going to particularly focus on the context within which we mostly operate, with this intersection of markets and social change and the role and relevance of impact measurement within that. We'll make frequent references to impact investing and social ventures, but not exclusively, because we work across and have worked across multiple other sectors in philanthropy, in the public sector, many of these hybrid environments and contexts. And so we'll draw on and have drawn on our broader range of experiences, while I think most of our day-to-day still reflects this interesting intersection of private capital for social good or public good, and the nature of what that looks like in terms of measuring, managing, and understanding impact at that intersection. Our previous webinars have talked about some of the kind of basics of some of this work, which includes that we're in a really interesting time right now where there is a lot of growth in impact measurement activity, the demands of impact measurement data, and the number of people and organizations involved. So there's a lot to say about all of that we will only briefly touch on. The other thing we'll only briefly touch on is that there are so many standards, approaches, platforms, technologies, and we're going to preview some of those, but really that's a whole other webinar. And just to say that we are taking that as context. Another equally important piece of context, and perhaps why this is a timely webinar, is that while there's more measurement, there's also more concerns about impact washing. And that is being brought to life not only in impact investing, but also more broadly in mainstream finance, in sustainable reporting, as well as more generally now to see the response of regulators alongside that. And we'll talk a little bit about that. And a final contextual point is that, again, to what I said earlier, we're trying to present this material in light of the overall point that we don't simply want more impact measurement, we want more impact. And our comments should be framed in that light, that the landscape today, as well as the landscape tomorrow, is really in light of how can we get more impact, not just more measurement and management. And so with that, I'm going to jump right into it. And we'll start with our current landscape and today's environment, and start with Alex Nichols to present his two takes on what we see today. Alex, over to you.
Thank you, Karim. So good morning, good afternoon, good evening, depending on where you are, or if you're watching this as a recording, whatever time that is. Thank you, Karim, for inviting me here. This is an extraordinarily exciting topic and a very exciting time to be doing this, as Karim suggested. I mean, we have been working on this for many years, all of us on this call, and I'm sure many of you out there in the ether. And we think that we have seen an acceleration of the quality and the variety and the robustness and the technical skills around this sector over the last, let's say, 5 years, which is kind of unprecedented, probably. And also, perhaps we didn't even expect it to happen back in the day. So it feels like this is a space which is better institutionalized, better understood, its relevance and importance is better recognized, and which is really, if not a tipping point, then certainly on a high upward curve. So I'd like to say that as a kind of framing opening comment, and I hope my colleagues agree with me on that. So what I'm going to do is just give you some pictures. I'll have this slide and one later, because that's easier than text, isn't it? And they're reflecting what I've been working on. So this is to kind of nest this in my research. So here we have Aladdin and we have IFRS. And some of you will probably know what both of these things are, but the first may be less explicable than the second. So what I'm looking at that is underpinning these two slides or two pictures are looking at how we understand the materiality of impact data and how we create standards to account and report it. So the mainstreaming framework is really what I'm talking about here. And what we observe here is many of you might know about BlackRock. They are the biggest asset manager in the world, as you probably know, if you've heard of them. And they have a mainframe system called Aladdin, which is a huge computer, massive, I think it's in Arizona, kind of computer network, which allegedly, anyway, analyzes all publicly available data on financial performance of all companies in real time and produces algorithms to advise their investment managers how to use that data. And now, at least four years ago, that huge mainframe now incorporates, let's say for now, ESG data, or you could call it impact data. So this is a change, and this now means that the available data for decision makers in BlackRock is now more complex and rich and includes this additional material that we think of as our day job around impact. So I think that shift is enormous, and the work we're doing with BlackRock is showing how that's making an issue, making a real difference in the way they think about ESG or impact as an issue in investment management. And on the other side, in terms of mainstream, is the accounting frameworks that are emerging out of IFRS. Some of you will know, particularly the ISSB project, the International Sustainability Standards Board project, which is developing consolidated standards to be used to report. And the first two standards around climate-related issues, but following on with at least two others, maybe three, looking at biodiversity and human capital, and possibly a fifth. So what they're doing, and you can check them if you go to issb.org is their website. Within the IFRS family, they're trying to develop a sister organization to the International Financial Reporting Standards mainframe, standards that are out there publicly, so that we have both available. Now, this is focused on investors, so it has a very particular rationale behind it. But the reason I'm interested is because it's about an issue about materiality. So how is this data decision useful for people making all kinds of decisions? For IFRS, it's investors, but it could be for others too. And the reason to show it here is that this is coming down the road fast, and this will affect a lot of the way organizations report their ESG or impact performance. Because what happens when standards get consolidated is they get regulated. When they get regulated, people follow them. When people follow them in volume, there's comparative data, and then resources flow according to performance that's transparent. So we're a way away from that now, maybe 5 years, but we've made great progress in getting towards the beginning of that journey for now. Now, how useful is this for you if you're a small NGO or doing other kinds of work? At the moment, maybe not a lot. But the people who invest in you, for example, or other people who engage with you may have to report on this. So it's useful to know it, even if you're not using it yourselves. So that's my two penneth. And next,
Alex.
Julia, I think.
Now we're going to Matt next.
And then Matt.
Great. Thanks, Alex. Thanks, Karim. and great to be in this webinar, providing a practitioner perspective, really from my position working with impact and mission-oriented asset owners, asset managers, corporates, and ventures. I think the first thing to say as I reflect on the current state of impact measurement is that a lot of the good practices that have been developed and codified over the years through mainly norms-based and voluntary channels are really starting to find their way into the regulatory sphere now. And many of you may be familiar with these initiatives already and some of the logos below. But I think what is important to say, building on Karim's earlier comment, is that the regulatory interest across many jurisdictions, really starting in the EU, in the UK, and potentially even in the US, is not driven just by concerns about potential impact washing, but around wider market integrity. In the UK, for instance, the Competition and Markets Authorities calling out companies on and challenging their sustainability claims, and the financial regulator FCA in the UK have recently come out with a regime called SDR, Sustainability Disclosure Requirements, is really providing detailed rules for what investment products can and can't use when describing their both impact intentions and performance. I think the thing to say here is that the regulatory context is seeking not just to influence what's being disclosed about past impact performance, and going back to Corinne's point earlier, that measurement is not just about looking back, but looking forwards, that regulations are actually starting to seek to influence how the impact of companies' investments are marketed, measured, and managed. And I think one of the really interesting things for those of us who've been in the space for a while is to start to see the language of social change and measurement. Think of smart impact objectives, theories of change, which have often been the domain of practitioners, and those at the sharp end of measurement. If you read SDR, for instance, it contains all that language. So that is now coming from regulators. So that intertwining of measurement good practice with the regulatory environment. I think a related shift that has taken place is that measurement is often associated with just looking at the impact on people and planet, on end stakeholders. And while this is obviously still incredibly critical, there is this now equal emphasis on not just the end impact, but what you are doing as a funder or investor to help cause that change. So that's really about what resources you're putting to work to actually enable who you're supporting, whether it be a company or organization, to generate impact. And those resources, they're not just financial, they can be non-financial, such as knowledge or networks. And again, this is not just a backwards-looking reporting emphasis, but it's actually on, well, you're measuring your contribution to manage and maximize your contribution. And I think one of the interesting things here is that unlike sometimes the focus on end users, end stakeholders, that measuring your contribution takes measurement frameworks to potentially new areas in seeking to understand, well, look, how are the organizations we're working with, how are we shifting their attitudes, their relationships, their networks, their behavior? So I think is that shift from that is really happened from looking just at measurement as a technical kind of so-called hard topics to some of those so-called softer issues around organizational and institutional change. So let me pause there and hand over to Julia.
Thanks, Matt. Yeah, for me, thanks for having me. I'm very excited also to see the trends in impact measurement at the moment, benefiting from a quite powerful combination of an integration of research, but also now more and more, like Matt already mentioned, the development sector, as well as finance, business, and government. So there's different integrated stakeholders that are actually working towards how do we magnify impact. So one of the things I'm excited to see is that integration, but also the innovation of how can we make this work better. I think there's a benefit to using the foundation of, for example, monitoring and evaluation from the development sector. But even that has already been moved forward towards monitoring and evaluation and learning. From my perspective, at Acumen, we are an impact investor. We see innovations in multiple ways. For example, the combination of what do you look at ex ante, so before you make an investment, what is measurable and identifiable there, and then what do you do post investment? How can you connect that knowledge, but then towards forward management? So it's about measurement research, but then connecting it to what exactly are you going to be doing? And that's where we see innovative mechanisms, including impact-linked finance or performance-based solutions, where you can have rewards and you can integrate the impact measurement across our investment cycle, as opposed to just at fixed moments in time, and actually reward with financial incentives when impact performance is outdoing targets or thresholds as previously said. So excited to see how it's not static or backward looking anymore, but really integrating and benefiting from the different stakeholders and approaches, but also thinking about how can we make this work for our context. Secondly, I think it's exciting that we have more innovative tools. There's different elements to this. You see a real rise in software and platform and tech-enabled solutions. Almost every month I get invited to hear about yet another platform, whether we're interested as Acumen to use this. Usually it's still very much focused on pain points, so efficiency, both in terms of data collection and reporting, which are the main entry points, I think, where impact measurement comes to play. But now there's also an increase in terms of how can we also use the power of data and tech to identify solutions that are otherwise difficult to see. So I'm thinking about satellite data for our agricultural work across Africa. We're thinking about access to energy, where again you can see that from satellite data. Other elements in our case are more difficult to see. So we as Acumen, we focus on serving the poor, for which we need to know and we want to know actually the ultimate customer and the respondent's perception of what the impact has been. But even there, we as Acumen benefit from a collaboration with 60 Decibels, where you can have a tech-enabled ability to phone people who've benefited from our companies and sense check what, from their point of view, has been the impact. So there's really cool solutions that have been offered. Some of them also pull us away to what I think might be relevant, but I'll highlight that in the next slide.
Great, thanks, Julia. And so just to round out this section, and again, you're hopefully beginning to see some connections and threads across, but also we bring very different vantage points. My two examples come from some practice research over the last couple of years with other colleagues. And so the first I would say is that, building on something Matt said, that we've recognized that there are now many more starting points and areas around the technical solutions, and we've been at this for a long time on the technical side. We're now beginning to think much more seriously around the behavioral and relational aspects of measurement. This is something that also came up in Julia's comments as well. And so some of the work that we did with colleagues a few years ago called Ventures at the Helm, where we probed around what questions do different actors in the capital chain, particularly ventures and investors, ask around impact. What are their expectations? How does it fit with the range of tools and approaches they use? And what is working or not? And so we saw that there is actually quite a bit of misalignment among the ways in which measurement is done, impact expectations are set, and then ultimately how impact data might be used on both sides. And so I'm excited to see that there's much more attention being paid around how to create alignment using the behavioral aspects of setting the right expectations and goals together, working more collaboratively across the investment lifecycle, and thinking about the ways in which the tools and approaches and types of data and reporting, as well as impact management, can better serve the needs of all parties by having those conversations much more proactively. We spend a lot more time in the guide thinking through that, and I've included the link here. A related comment is around the increasing use of incentives, and as Julia mentioned, whether that's impact-linked finance or impact-linked compensation, work that our colleague Ani has done around impact-linked compensation, the link here is as well, really highlighted the importance not just of finding the right models and structures or the right metrics. It's really about the role of governance, the role of behaviors, and thinking through the implications of how you link structures, metrics, and governance. And for me, the phase I think that we're in now is that we've got the starting points around solutions and approaches. We have now got a lot of use cases around how they can be deployed, and we're now beginning to grapple much more seriously with the behavioral elements and the consequences of measurement, which are just leading us to new questions in a way that is asking, can we get more value from impact measurement? What ultimately drives the bigger question of, can we get more impact if we do impact measurement better? And so that was a very quick overview of all of our perspectives. And now we wanted to ask you, and Jamie, if you could help us launch the poll, please. From the 4 different perspectives that we've shared, we've had to combine those just so we don't give you lots of responses. Are the options that Alex shared around mainstreaming impact data and the convergence of reporting standards, what are showing up in your context as the most prevalent? Is it around market integrity and regulations, as well as the contribution additionality questions? Are you really seeing integrated innovative mechanisms, as well as the growing adoption of data and tech tools, as Julia mentioned? Or as I just talked about, the attempts to improve alignment, as well as think about incentives around linking impact as well as compensation. So why don't we give it 30 seconds, and I'll invite Julia, Matt, or Alex, as we're waiting on poll responses, if you have any other reflections so far.
Well, we have a question about impact monetization for Matthias. I don't know if I think maybe Julia's writing an answer, so maybe I won't go there. But I mean, there's been a long debate about this, and I wouldn't want to second guess what Julia's typing now. So maybe you should respond if you're going to type. Do you want to say something, Julia?
Yeah, I was just about to type. Unfortunately, the answer is an annoying one. It depends in our experience. So it depends on who's monetizing and who holding the power, and what are you hoping to do with the monetization. In our experience, when we link impact rewards to our company's performance, it's shifting the energy around impact in a very incentivizing way, which is really positive. At the same time, some of the, for example, the Harvard methodology is very macro, and it's not capturing, for example, our reality of working with the early stage companies in rural Africa, India, Pakistan, Latin America. So the monetization in our context works when we work with companies because it incentivizes in a better way, but there's lots of unintended incentives that can be linked, and also it all depends on how you measure it. I do think the dollar language is a powerful one. So I think it doesn't necessarily capture accurately or precisely the impact as we would do when we do other methodologies. But I think it's a powerful way to offer, especially mainstream finance and corporates, a way, and the public, in fact, a way to identify what's going well and not so well when we think about impact, or what companies in particular are able to hide or visualize via these kinds of methodologies.
Well, if I could just add something to that, thank you, Julia. I mean, we go back to that little critical framework flow chart that Karim put on earlier, beginning with the question why. So, why would you want to monetize? And then it becomes the question, well, who cares about that? So to Julia's point about, dollars speak, they do, but they speak to a certain audience. And so if speaking to that audience is the purpose of your impact measurement and reporting, then monetization may well be a good idea, but it may not be. So I do think that in your question about, the Harvard methodology, as Julia said, is very much industry specific, and it's not done at really at individual business or even social enterprise levels. It's not appropriate for that, in my view, though the underlying methodology is very interesting. So there are different ways we can do this, but it is a powerful measure because we know that numbers talk to many people.
Great. Thanks, Alex and Julia. There's a lot more to say on this, and I think we should actually put this as one of our future topics. I'm going to ask Jamie to share our results now, and there's an interesting skew here. A lot of, I guess, what you're all seeing in your context around the current state is the mainstream of impact data or the convergence of standards, perhaps not surprising with this crowd, but also some of the other areas are also showing up in your work around. I assume that the data and tech, as Julia said, effectively, not every month, I say every week, we're seeing something new pop up. And then just the increasing interest, it seems, these days around incentives as well. I think the questions around almost like contribution additionality, Matt, as you noted, are probably coming down very quickly to many participants in this market and at the intersection. So why don't we use that as our cue to transition to what we're seeing next? And we do have a couple of questions that have come in, and we'll try and pick them up as we go, but also towards the end of this second section. So why don't we just move into this next, and we'll keep us moving. And this is for everyone out there who was expecting something around AI. Here it is. We see a lot of attention and interest, obviously, in AI, and Alex is going to talk about it in a minute. But just to say that in some ways, this is playing out in very different ways in the spaces we operate in, as well as some of the more mainstream areas that Alex alluded to. And there are a lot of questions and implications around what this means in practice. So I'm going to use that as my cue to transition over to Alex to make his 2 points around what we're seeing next before we go around the room.
Thank you, Karim. Well, so yes, looking next, and these are two research projects I've been working on. So maybe I'll do them. Well, I can do the AI first, since that's the segue. The premise of the AI project we've done with a bunch of partners is to really unpack that assumption that it's always a good thing, and it has powerful magic to show us data evidence that we don't really understand beforehand. So we might think, impact data is complex and difficult, and it might be that AI is an answer to getting better answers out of that about performance or future predictions of performance. And the truth is, of course, it's much more complicated than that. So in the conversations we've had with some of the people who are using AI systems or trying to use them to analyze their data around impact better, of course, there are a number of things cropping up, and you would understand these already from your work, if you use ChatGPT or whatever. So two obvious things. One is that you have to prepare the input data very carefully. So if you want the AI engine, at least at the moment, when there's a sort of a limited intelligence there, but that'll change, no doubt, it has to be carefully organized around consistent taxonomies, because the machine won't read it properly unless you do that pre-work. So for some organizations who are keen to use this, that's almost a non-starter, because they might have a lot of conditional evidence from the past, but it's not consistently reported. So there's a big question about that has to be thought about. And then there's a question about the language between the tech operators and the impact producers and the impact data users at the end of it. And they speak completely different languages, because the language of tech is not the same as the language of impact creation or impact reporting. So we're finding people saying that conversation between themselves and the developers is complicated. And of course, the danger is if that doesn't go well, then you get nonsense. You get data that even if the data is well prepared, then the tech won't give you the answers you need because it won't understand what you're looking at. So there's a whole bunch of things there we're looking at, which I think are really important. Of course, everybody has to do an AI project, so that's just what I'm doing. So the potential's there, but there are several hurdles, I think, before it's the answer from what we're hearing. The impact risk thing is different. This comes out of work I did a few years ago with Emma Tomkinson and others, trying to understand if the way we think about financial risk, which may, let's say, essentially is about a point average return and then a distribution of returns, if something like that could apply to our outcomes as well. So could we think of the risk parameters of an outcome actually happening or expected outcome happening or not could be similar in an analytical sense to how we think of financial return? And so we're going down a series of case examples to understand how people think about, let's call it impact risk at the moment, or outcomes risk. We have 8 use cases we're using, including BlackRock, to try to understand what this would look like. And we have a working thesis. There's something going on here that's interesting, because we have an understanding of R in finance, the discount rate and also the risk return rate. We don't have such a good idea about that in what we do in impact or expected outcomes for many good reasons, I'm sure. But we're trying to push that thinking a little bit further. So one idea we're thinking about is simply, as you'll know, those of you who've done like net present value calculations, is you have a discount rate that tells you the value of your money over time. So year one is worth more than year 5. We think with impact is the opposite. We think if you invest in an education program today, year 5 impact is going to be higher than year 1 because it will have more time to have impact. Now, to do that, you need a negative discount rate if you're going to do this. So the opposite of what you expect in finance. So that's the kind of thing we're looking at the moment, about whether we can use those kind of predictions of future performance we get from finance, but tweak them in terms of how they would help tell us something about the value of future expected outcomes. So that's 2 projects we're working on right now.
Right, thanks, Alex. And I think what you just explained is, yeah, maybe we'll give some people at least some food for thought. And now hand over to Matt to talk about what you're seeing next.
Thanks, Grim. So a future challenge, or what's next? I think it is a future challenge we need to address, both in individual organizations and collectively, is how to achieve impact both at scale and with integrity. As Alex was saying just then, I think it's widely recognized there are inherent risks that organizations are not always going to be able to deliver on their intended impacts. But I think what we're still learning as a sector and as an industry is not just how to measure exposure to different types of impact risks, but actually how to best manage and mitigate those risks, and the best levers that different organizations can pull on depending on the contextual challenges for doing so. There's a lot to say here. A lot of exciting work, I think, has just started or is starting to scale up or is being seeded now. I'll touch briefly on a couple of levers that I think are showing promise. And those are verification, impact reporting standards, which was mentioned in one of the questions already, and if I've got time, skills training and certification. So the first thing to say on verification, and for those of you who are familiar with the impact investing context, you may know about the operating principles for impact management, which have been around a few years now, but have over 180 signatories now, and they really try and set out a global standard for managing investment portfolios towards positive impact creation. And the principles actually require independent verification. So that's really created for the first time this big push and drive and demand for external experts to come in and provide constructive, often forward-looking feedback on how to improve impact management practices, but also to share more widely the results of those verifications, at least at an aggregated level, collectively and publicly, to improve impact management practices across the board. Other related initiatives, like we have the logo there, the SDG impact standards, have got a series of standards for impact management for different asset classes and organizational types, alongside a robust verification regime. So that is having a lot of traction at the moment. The second lever is related to impact reports, which, for a long time, let's be honest, have been quite heavy on marketing material and fairly light on meaningful analysis of impact performance. But a new initiative starting to change this, or try and change this. And so over 350 investors in private markets have come together over the last year and a bit to develop a set of impact performance reporting norms that were mentioned already in the Q&A box, spearheaded by Impact Frontiers, who are a learning and market building collaboration. And hot off the press, version 1 of those norms was released this week. And there's going to be an open access pilot program that report users and preparers can sign up to before the end of June. So I'd encourage you to have a look at that, because I think it is another possible very powerful lever. And the last one that I'll briefly speak to is, from our perspective, from working, as I said, at the practitioner end of perspective as a consultancy working with clients, what we often find is that what is lacking is not the tools, frameworks, or standards for impact measurement, but, to be honest, the knowledge and skills to be able to use those tools effectively. And I think a lot of this is related to analytical capabilities, being able to evaluate whether outcome proxies are valid, what level of evidence is good enough. So I think it's not just about the ability to collect impact data, which is where conversations often go, but the ability to use it to make better decisions over time. Lots of interesting stuff happening here, and I'll put in the chat those interesting certifications and initiatives that are emerging. In the interest of time, Julia, over to you.
Thanks, Matt. Yeah, just to follow that comment of it's not just about data collection. And I think this is where there's still very much a demand or an expectation that impact measurement delivers impact data. And the data is what we all need. But actually, what I would argue is the data is a means, not an end. So the data itself won't give you an answer. It won't prove that you've had impact. It will be a collection of aggregate data points. It still needs the interpretation and the meaning. And this is where the image that I put here is that it will still need people to analyze, interpret, compare, contrast over time with benchmarks. It needs to give meaning. And that is the power of actually impact measurement. If you can start to see it as it's not about the data collection, which is usually a rabbit hole where lots of people get lost and lots of resources are being sucked up. If you aim for impact reporting, it's that the data diagrams that may look amazing, but I think what's next is that we get more and more people who are actually keen to understand what does that look like, what does it mean, and how can we move forward. The second thing that I see moving forward is perhaps two parallel and contrasting trends. There's a demand for more standards, for more regulation, for more verification. At the same time, that does not necessarily mean that everybody can use that data. So there's a contrast in terms of who's actually benefiting from utility. Just saying impact data is needed is not enough. Is needed for whom? For what? Who's going to do something with it? So for that, there's on the one hand, the power of coming together and creating a common magnifying glass to offer transparency and communication for where the impact is happening on the ground and who needs to know that. Those people who are closest to the ground don't get the same benefit from knowing how many lives they've impacted if that feeds into a wider fund report. They already know. These are their customers. So there's this tension, and I think really interesting dynamic that we see that we need both. And I think that's also where the sector is going. We need both the transparency, the standards, and the macro consistency, but we also need to be mindful of that the cost and the burden of on-the-ground data collection and who's using the data for what purpose needs to be front and center. My tagline is impact measurement for action. If you're not clear on what you want to act on, you can get lost in trying to get the impact measurement right, but you're still not able to potentially use it to magnify the impact. So coming back to Karim's point, I think this is where, it's not just that we want more impact measurement, we want more impact. How do we get that is where the new M from IMM is focused on, and I think there's much more to unpack there, which is exciting to see.
Thanks, Julia. And so building on and some of the related trends, I'm going to push a little bit further on what Julia said. And in terms of what I'm seeing and some of the areas that I think many of us are beginning to grapple with, the first is around understanding the governance consequences and decision-making implications for when you have impact data, perhaps impact data that might tell you some things in line with what you hope would happen, but building on what Alex had said earlier too, what if the risks that you identified around impact not happening in the way that you expected or anticipated, what if that actually gets realized? What if there are some negative or unintended effects that are now material enough that you have to actually have a governance conversation? And what does that look like in terms of your response? Now, this applies across the range of, in our cases, the types of impact investors. We're seeing one of the trends, which is quite positive, that you've got different kinds of impact investors coming together in transactions that are clearly defining different goals that they're seeking. And for example, a philanthropy may be looking for quite deep and durable impact, and a mainstream capital provider might be looking to meet some of their S in ESG goals. So the type of precision, the amount of evidence, the kind of tracking over time obviously looks different. But if all of those parties have agreed to a common set of impact goals, and all of a sudden the data shows that might not be playing out in the way that they anticipate, this becomes a question of how you deal with that, not only at the operational level, perhaps not only even at the management level, but then in the boardroom. With some colleagues at Mondial Impact, we've been observing this in many different contexts, not only on the corporate side, but also on the investment side and across a range of investment institutions. And as was brought up earlier, now that the regulations are really have teeth, are much more precise and much more specific, we're beginning to see that when the data infrastructure and the availability of this kind of data provides you with the ability to understand and respond to where there might be negative or unanticipated effects, well, you have to do something about it. And so those are raising very different kinds of questions around accountability for impact. And as Matt said, when you add onto that the layer around verification and assurance, not only from specialist providers, but also from your existing accountant or auditor, then it becomes very, very real in terms of the consequences of measurement in a way that perhaps earlier on we were really focused, as Julia and Alex were saying, on the front end aspects around measurement. Now we're really dealing with the consequences of measurement. A somewhat separate point is, and really back to something I started with, we're trying to get at more integrity, more sophistication, and more better measurement in many ways to be able to have more impact. And there's at least some critique and perhaps some counter proposals. And Eleni's question to us in the Q&A is, what does this look like when we zoom out at the systems level? Because when you're deploying capital in ways to actually achieve more transformative impact rather than a narrow version of transactional impact, you might need to change the way that you approach measurement. And there's some early work that we're doing through a systems change initiative with Rockefeller Philanthropy Advisors, which is looking at when you apply a systems lens to measurement, does it change what you measure, but also how you measure? It might even change who's doing the measurement and at what time you do the measurement. Because if a transaction-oriented timeline is 1 to 3 years and a systems change timeline is 10 to 20 years, well, all of a sudden you have a disconnect if you're only measuring at year 1 or year 2. It might also change who does the measurement. And back to some of the points that were mentioned earlier, as well as some of the modules that Alex teaches about around how measurement itself can be empowering if we change who does it and who sets the rules and who makes the judgments. And a systems-aware approach to that might be able to give us some different answers around who should be measuring, who should be calling the judgments around what is good enough, and what does this mean around the nature of reporting and accountability for impact related to some of the other points I've come across. And so I'm going to pause there, and we'll launch another poll, Jamie, if you could, to just get your take on, we've covered a lot of ground in terms of the different aspects around AI, impact risk, scaling with integrity and verification and assurance, as well as the value add from data, as well as transparency and utility. And the recent points just now around the importance of governance, as well as systems lenses on impact measurement, and there might be others. And so we'd love to hear what is showing up or what you're seeing in your context. Where do you think there would need to be more attention and awareness around these themes? And then I'll ask Julia, Matt, or Alex if you have anything to share, just as we're getting some of the poll responses around what people are seeing in their own organizations and contexts. We responded to a few questions already, but anything else from you around what we've heard so far?
Well, I can just give you a brief comment about, where I work. So I work in a business school in Oxford, and these issues around broader impact are now so much more mainstream in the discussion, primarily with the MBAs, but also other students I teach, than they would have been 10 years ago. So whatever we mean by impact, and has many interpretations, as we know, the importance of, let's call it, non-financial data, financial which is outside of the P&L, is increasingly recognized by our students and by our courses. And that's a really important shift in a business school and an MBA, because what it shows us is these kind of data are now so much more material, decision-making, government and private sector, than they have been for years. And that, I think, is an important shift.
Great, thanks, Alex. And it is interesting to see this intersection between the work that we've all collectively and others have done over a long time just to build the fundamentals around the language, the starting points for measurement, and now essentially as it's being mainstreamed into different organizations, into regulations, dealing with the consequences of that are becoming much more prevalent, but also just acceptable in ways that the nature of the conversation has changed. It's not a question of whether or not you should measure non-financial impacts. It's a matter of what is the best way you do it in your organization, but also what could it look like in the face of these innovations around technology and the changing nature of regulation. I'm just going to pull up, I think we've already shared the results of our poll, and it is, again, a quite interesting variation where we see a lot around, at least from what you're all seeing, around scaling with integrity and impact assurance, as well as some of the other aspects around governance, transparency, utility, value add. And I think we're all grappling with the consequences of AI in so many dimensions that that's almost impossible to try and pick up where we should go. But maybe I'll ask you, Matt, since the scaling with integrity and impact assurance seems to be something that other people are seeing. Can you say a little bit more about what you're seeing? You are doing impact verification assurance with the range of clients. You're seeing how it's showing up in mainstream areas. Where do you think it might go? What do we need to keep an eye out for? Where can people get started if they want to learn more about this?
Great. Yes, I think point to a couple of resources that may be really interesting for those who want to dig into it more and perhaps pose a more fundamental existential question about the future of everything verification assurance. I think the first one is that, for those who are interested, the Impact Principles website, has the disclosure statements for every investor who signed up to the Impact Principles, which sets out their specific impact measurement and management practices, sometimes in fair amounts of detail, and alongside the findings of each verification. So it's actually a really rich, yes, qualitative data set on impact management practices that for the first time is out in the public domain. And as I said, that's over 180. And really pioneering organizations like Bluemark and others have actually started to bring together and share in the public domain benchmarks for what good impact management practice looks like, both for signatories of the impact principles and the wider market who are voluntarily now starting to opt in to have verifications, even if they may not be signatory to one of these standards. So I think as market intelligence and collectively learning and improving about what good looks like, that's really important. I think from an accountability and learning perspective, I'll just end with a question, which is, we know that audit and assurance hasn't always worked brilliantly in financial markets. How can we avoid making the same mistakes when we're talking about social environmental performance data? Who verifies the verifiers and questions like that, I think, remain to be grappled with to make sure that the scaling of integrity really does happen in practice.
Great, thanks, Matt. And I think this raises a number of these questions, as you pointed out, is that some of what is being transposed over from let's call it traditional audit and assurance might work, but it also might pose some limitations. And if we're grappling with different questions around, for example, what is material, what is good enough, who decides, and as you're saying, who verifies the verifiers, in a way right now where we're moving from a principles-focused set of verification efforts to then moving towards performance, and perhaps there'll be a middle ground around practice. Those raise very different kinds of questions over the next 5 years than the ones we've grappled with so far. Julia, maybe I'll ask you to jump in and any reflections, any final reflections just on the poll and any of the questions we've had so far around what's next.
Yeah, just very, very exciting and interesting to see the mixture of the balance of different poll answers being covered by the themes that we're discussing. I think for me, what's interesting is how can we keep in mind what it's ultimately for and make sure that we, even for verification and reporting, that we don't forget the next step. Like, how do we then make it work towards impact? Because often we end up working towards either having the data or to the report or the verification disclosure, and then how can we use that as a hook to make sure that we then ask, what does this mean and what can we do better? And I think that with all these trends, these are all the building blocks that facilitate and elevate our ability to do precisely that. And if we don't bring the stakeholders together and have those discussions, we're not optimizing for impact with all these enriched tools. So I'm excited for that, and I'm also excited for the course and for this growing group of people who are interested, practicing, and actually bringing people together across sectors and industries. Because I think this is really actually quite a powerful and remarkable bridge building collaborative, which I haven't seen in other sectors in the way that impact measurement is able to benefit across sectors and across even industries and academic disciplines.
Thanks, Julia. Yeah, we talk a lot about, getting out of the silos, and at least this is one area where we're seeing that play out, where there's a lot more cross-sectoral and even just like different contexts around how we're applying measurement to make people's lives better and the planet better. Alex, a final comment for you before I wrap us up.
Yeah, thanks, Karim. I'd just like us to think about one word as we wrap up, and that's power. Because much of what we talked about today could be interpreted as access to power, issues around power, who has voice, what technology can do to help imbalances in power. Because for me, any kind of measurement system is about enacting power. In order to, when you define a system of measurement or a standard, somebody has to follow it, and somebody tells them they have to follow it, and somebody audits it and says it's right or wrong. So in all these mechanisms, there's power, sometimes hidden, sometimes latent, sometimes obvious. And I think one of the benefits of having a more holistic view of what an outcome is or an impact is to surface some of those issues around power imbalances. And I think in doing that, you can address it. If you address it, you actually have more impact. Back to the idea of kind of grounded, bottom-up data reporting and so on. So I'd strongly advise you in your day jobs, think about power when you do stuff. Who has the power?
Thanks, Alex. That's a great reminder also around the who questions. For who, for whom, who is measuring, who faces the consequences and the implications of measurement. And even within our program over the last few years, we've spent much more time on these questions than we did in the early years, which were really about some of the fundamentals. So I think, that's a great reminder to ensure that those are at the heart of how you build your approaches and strategies, and then how you think about where you might face some roadblocks, or as Julia was saying, maximize the kind of decisions and relevance of impact measurement for more impact. There's a lot more to say in all of these areas, so we just wanted to give you a bit of a preview, and we will also be able to share this recording and links to our playlist so that you can see our previous webinars, which cover some of these topics in much more detail. Closing up, I just also wanted to say that we have a few more spots left for the program. I think we're pretty much full, but we've got a couple more. We also have other programs that we are offering at the school around social finance in September and impact finance innovations in November. So if you're interested, please let us know. We are also going to be showing up at a couple of events in the next few months. If you're attending AVPN conference next week in Abu Dhabi, we will be there. So please reach out to us. We have an Oxford event where we'd love to see you. Some of our alumni are organizing the first Impact Investing Summit in Istanbul next month. There'll be a lot around not only impact investing, but also impact measurement and what they're doing in their field building efforts there. If you are in the region and want to participate, please reach out. And great timing is that we're going to have a Skoll Center talk and webinar on impact monetization in June. And so we will be hearing more about some of the questions that were raised earlier around the different ways in which we can value and monetize impact. How is it happening? What might be working with it? Where are some of the challenges, and what's next? So stay tuned and follow the Skoll Center for that as well. Thank you all for your participation. I'd like to thank also our speakers who are really all at the forefront of thinking about what impact measurement looks like today, where it could go next, and how it could be better. So thank you. We're excited you continue to be part of the program and community that we're building together. And we'd love to hear your feedback around this webinar, what else we could be covering in future webinars. And thank you all for joining. We appreciate it.